Okay, apologies, folks. I think they can hear me now. I had the audio on mute, so I think we can. I think y'all can hear me now. Okay, it says now we can. So thanks. I'm glad that Stelios put that in there. Um, I had the webinar on, but I had the mute because I'm trying to start the webinar a little bit early. But let's go and get into that right now. I was referencing here with the dollar. It looks like we're resolving ourselves to the downside, from this break that we had, this pattern. And one of the things I was just mentioning when I had the audio was that we talked about this, as this market started to break a little bit lower. And what I was saying here, and I've been mentioning it for the past couple of days, is, it reminds me, like I said, the 90s movie, Dude, Where's My Car? Dude, Where's My Rally? We see U.S. rates going to the moon. I mean, absolutely going to the moon. Now, this is huge, huge support in here. This 40.25, you always can get a little bit of an overshoot. But look at these U.S. rates just going to the moon. And look, the dollar index, nary even a whimper even higher. So as I was mentioning here is, we get this, the market has gotten really tired and listening to the trade tariff, and it's going to be so bad, and the dollar would benefit. But each rise was just a little bit less. Each rise was just a little bit less. Each rise just a little bit less, to the point that when they actually announced the additional $200 billion, we only got a 22 tick rally, because it's just the market's become immune to that. And so that was my thought. And the only reason I think that the dollar didn't unwind yesterday was because we saw U.S. rates really fall as far as the prices. U.S. rates rise, and still we couldn't get the dollar to rally. All it did was pick up a little bit off these lows. And we talked about this, is that you're just not seeing this being reflected in higher prices in the cash dollar index. The dollar yen's still hanging around here, but once again, I question this market up also, is because once again, with rates, this moving up so high, and the dollar yen is just kind of hanging around here, can't push any higher. Only thing I think that's holding it or keeping it in play right now is this S&P. And same thing with the S&Ps. I'm not sure how long they can be able to sustain this, although this is a very key area for the bonds themselves. But like I said, the dollar's starting to unwind here. Now, what I was saying just a few moments ago is, I was telling some people, this is a good little area of support. I'm talking about minor support, which was the 94.24. The market will try and probably hold here. I think we're going to start support from yesterday, which is 94.9. This is what I think the market is going to go to before we get a little bit more of a better bounce, like let's say 20 pips or 20 ticks. I think we'll get to 93.72. What I was saying earlier when I had the audio issue is that I'm still in play for, which is, I don't know how this, if it makes sense, it doesn't make sense, but this is what I came up with, which is moving this down here on this break, which translates to about 90. When you came from here up into this area, let's see, let's drag this away. That tie came up with the 92.80. You see right here. So my target is for a move to 92.80, but with a pause at 93.72. But I think we should be able to make it here to 94.09. There's a little bit of a pause here, some very minor support, and you're starting to see that come to fruition a little bit. And what I was looking at was right here. I'll show you right there. Right there. You see? Coming right there, right there. So there's always a little bit of an overshoot, but this 24-ish area here, 24, 25, right there. So a little bit of an overshoot. You may see let's just look at here. You may see the euro stall a little bit here. Same thing maybe with the cable. One of the things we mentioned, the cable, as it was coming on, we had some audio issues, is that every time this market pulls back, it always comes right back. Every time it pulls back, like I said yesterday, I think PMA had some problems with Barnier's cologne or something like that. So the market pulled back. But we were saying is every time it pulls back, they turn around, they step up and buy it, and it pushes up even higher. And I mentioned this yesterday. Anybody that's short, they're thinking, man, if I could just get a pullback so that I could, get out of my shorts. But each pullback, we find good buyers. I mean, you get a good sharp pullback here, buyer. We talked about this, and they just keep, each subsequent low is even higher. Each time we get a big pullback, and this is a pullback, a good pullback. We actually saw it actually pulled back 80 pips as we were coming on here yesterday morning. But look, they turned around, bought it, and moved to even newer highs here. So like I said, We've got that push coming in here for the cable. Also, the Aussie, well, you know what? We talked about this right here and putting a little bit of I guess a little bit of flavor to it, saying, hey, dude, where's my rally? Meaning, like I said, if we're getting these rallies in rates, why isn't the dollar rallying back? Well, you know, here's the thumbing. Here's putting the thumb in your nose or whatever, thumbing the market. Here's the Aussie dollar. Look at the Aussie dollar. Isn't this the market that's a liquid proxy for China, the one that's going to be so worried about it? And that's what I'm talking about. This story about the trade news and trade stuff, that's, like I said, the market's become immune to it. It's the boy that cried wolf, and the market's starting to say, you know what, enough of this stuff. Maybe it's not going to be all that bad, and it just seems to be one more tariff. I mean, maybe next week, maybe there's going to be $500 billion worth of tariffs they're going to announce. Who knows? I mean, maybe the dollar will be able to rally about maybe 15 ticks or so. But like I said, there is a little bit of support here. I think we'll get down to 94.09. But like I said, to me, when we looked at this, we talked about it, any rallies, and we had this even on ForexAnalytix, to move back to 95. The only thing that would invalidate, and it wouldn't turn the dollar index bullish, but we talked about this, the only thing that would invalidate the bearish moves here was a 2-hour close above 95.32. All that would do was invalidate the bearish outlook, and then we'd have to move up here with a 2-hour close above, you know, really 95.71 to open the door for a move higher. But it's starting to resolve itself lower here. We'll take a look also for data. We'll get moving on. We got a little bit of a delayed thing with the audio issue. Earlier, and that was my fault. I had it on mute because I started up the webinar. I started up about a half an hour early, but I put it on mute until we get ready to come on. I turned on the mic, but the webinar part was on mute. But anyway, we see UK shoppers says to have cooled the summer spending splurge, retail sales came in at 0.3, weaker than what was expected here. We also had some Swiss news, and we'll just touch on that quickly. We're running a little bit behind because of that audio issue. But coming into the States, we do have Philly Fed at 8:30 Eastern. They're looking for a Reuters poll of 17. Last time was 11.9. That might give the dollar maybe a 5-tick rally. I'll be a little bit sarcastic there. Eurozone consumer confidence comes in at 10 a.m. Eastern, and existing home sales to come in at 10 a.m. Eastern. Let's go and move this out of the way. And we're going in touch here. Gold's, gold's been holding up. We talked about it very well overall. But I tell you what, gold's taking a bit of a muted reaction here, even though the dollar's working higher. I mean, the dollar's working lower. But gold has held up very well, and actually, as we talked about, positively diverged from the dollar. Even though the dollar would get stronger, gold would still move weaker, but it would, same thing to a certain extent, like with cable, it would kind of hold its lows. We talked about that. When it would move lower, be dragged lower, kicking and screaming like it didn't want to be there. But watch this area here for the dollar. There's a little bit of support here. So you might see the euro maybe pull back another maybe 15 pips or so. I'm talking about the euro. But I think we'll make it down here, this 94.09. I think that's where the market would like to go to. Let's go and take a look here with the news, do a quick overview before we jump into the analysis. Oh, we're not doing too bad on time. We're doing okay on time. But anyway, Sterling extends gains after forecast beating the retail sales. Sterling rallied on Thursday after British retail sales beat forecasts and on growing optimism that Britain and the European Union can make significant progress towards a Brexit deal at the EU Leaders Summit. The pound was helped by broad dollar weakness. Britain's sales jumped 3.3% in August, compared with the same month a year earlier, better than all forecasts in a Reuters poll of economists. In monthly terms, sales rose by 0.3% in August from July. The UK continues to churn out solid economic indicators, positive for the dollar. Cable, David Mann with CMC Markets noted. And on we go with the Brexit talks at the EU summit in Salzburg. Tries both to be tough on the UK and get a deal onto the table, said FX strategist at Societe Generale. The Irish border issue remains the chief stumbling block to a deal, while the EU prepares for a November summit where it hopes an agreement will be sealed. And it mentions here that the euro pound is now clinging onto the uptrend support line drawn from the April low. Let's go and move on. Dollar stuck near 7-week lows as trade war fears fade. The dollar hovered near a 7-week low against a basket of major currencies after a knee-jerk reaction to new tariffs announced by Washington and Beijing on Tuesday. Currency markets are settling down, expecting the fallout will take some time to show up in corporate earnings and not to produce a sharp global shock. It is the champion reserve currency and has risk-free funds rates, so the currency with the lowest risk is offering the highest yield in the G10, said Andreas Koenig, head of FX asset manager Amundi. Okay, and investors were awaiting next week's Federal Reserve meeting. The U.S. Central Bank is expected to raise marks on its benchmark rates. The British currency also strengthened on optimism that Britain and the European Union can make significant progress towards a Brexit deal at the EU Leaders Summit. The safe haven Swiss franc did not move significantly after the country's central bank kept its ultra-loose monetary policy in place on Thursday, citing the fragile exchange rate situation and rising international trade tensions. The S&P has sought to stem investors' appetite for the franc over the last 3.5 years. Short term, the S&P might be able to prevent the franc appreciation with the help of interventions, but no doubt it would not manage to do so long-term, said commerce strategist Ulrich Luckmann. And on, and you're seeing the euro get a little bit tired from here, and there's a little bit of support here. So it says gold prices edge up as easing trade concerns hurt the dollar. Gold prices inched higher on Thursday as the dollar softened amid easing Sino-U.S. trade tensions. The risk is sort of flattening, but that's also taken the wind out of safe haven appeal of the U.S. dollar, helping gold. For gold to break 1210, we need to have the dollar weakening against the emerging market currencies as well as the euro, said Stephen Innes. Investors have been buying the dollar, believing the United States has less to lose from the dispute. However, a spot of weakness in the dollar indicated that worries of the trade tensions have eased and tariffs were seen to be at lower levels than some had feared. The market gives the outward appearance of remaining range-bound, but hasn't done enough on the upside to alter this appearance. However, the short-term prices would strengthen to 12.11. A break above could see 12.21. And Italian bond yields dipped, risk sentiment offset budget fears for now. The Italian government bond yields dipped on Thursday as the improved risk sentiment in the global markets allowed the market to recover. Italy should aim at a 2019 deficit more than 2% to output spur growth, the cabinet undersecretary said on Thursday actually. There's been a lot of news flow and parties are in discussion about the budget. So let's go on and move on to the analysis. Get this out of the way. So we had our 1717, which is basically what we're at right now. And we talked about also that this is, as we came onto the show, a little bit of support coming in right there. It's this 24-ish area. I think we'll still be able to resolve ourselves to 94.09. You may see the euro take a little bit of a pause here, possibly. Also, we do have Philly Fed coming up next hour, so that might provide a little bit of support here for the cash dollar index. But like I said, it does still look like we want to resolve ourselves at a little bit higher price. So let's go and take a look at where we stand here with the euro. We're just right up here against the 1717. Obviously, the risk is that we may further push some stops. The only thing is that right now with the Philly Fed coming up and we're back up here at this level, I think that the market does want to go on and resolve itself higher. But like I said, in the meantime, we might have a market may want to go on and take a bit of a pause before it reasserts itself here. So we may, as we come in, if we were showing here that the Philly Fed looks like it may be a little bit good number here. So you may see a bit of a pause here. with the euro dollar. So where do we see resistance for today? Let's take a look here. So the market is trying to push even higher. You know, if this dollar comes apart, we can really start to see it come off further. We're going to go on, at least initially, when we're looking for short-term resistance. I think we can push a lot higher with the euro, but with the short-term resistance, we're just going to go right here with the 1767, initially speaking. The 1767. Just be a little bit cautious here. We do have Philly Fed coming up in the next hour, so the market may want to wait before it tries to take that next move, also as we come into the New York trading. So let's go on and we'll go with 1767, although I think we can push much higher and this market will probably resolve itself even further. But let's go with 1767. And the euro's still trying to push higher here. Here. Still pushing up here. And let's see as far as support. Well, now support's going to move much higher up in here, and really it's a 1658 and even just above that. So let's see here. It's going to come in right here, right there for support. 1668. So that moves up quite a bit here. 1668 for support. Let's go move into the cable now. We've already had a pretty good run here in cable. And we're not that far away from our overall target, which is this 33.17. We're even moving away. At this point, we'll just go with this level here at 32.97. 32.97 here. Certainly it has turned bullish. And we do expect the dollar to continue to get weaker here. With an eventual move, like I said, getting down to at least about 94.09. Moving on to the support here for the cable. If we see a pullback here, this is going to be the support. We have this 31.68. It's still a long ways back here, a long ways back. I think they're doing everything and anything they can to pick this up, and it's going to be right there at 31.52. 31.52 here. And let's go and move into the Aussie. Well, we finally we got up above our bias chart resistance here. And we have to wonder is how far can this Aussie go in and pull back? I mean, as far as rally back here. We've got some good resistance. There's going to be, obviously, we're an area where we'll find some support for the dollar. But where does this market want to go if we see a further dollar correction? It's going to be right here, 73.20. That'll be our resistance here, 73.20. Still obviously very bearish. And for support, right there, coming across. I think things are starting to turn around here for the Aussie. Yeah, we'll go right there. It's going to be 72.24, 72.24. And let's go and take a look here with the Kiwi. Boy, what a move here for the Kiwi. Now, the Kiwi actually came right into our resistance here, and we're just above it. That's at 66.56-ish area here. The next level's right there, 67. And that would be resistance here right now, 66.79. 66.79 for resistance. 66.79. Very nice move here in Kiwi, very nice. And for support, it's going to come in right there. 66.14 for support. 66.14 come across. And let's go and smooth this back to the Aussie. There we go. And let's go and now move into the dollar CAD. And this market has continued to weaken, but we've come into some very good key support here. Right here at this 28.91. We just about made it there. Well, we know this dollar has really taken a good beating against the dollar CAD, against the Canadian currency. We've just about made it here into this 38%. And that would actually take out the lows here. So we're actually going to go, even though we've come down to this key level 28.91. We're actually going to go with that for a little bit of an overshoot here. So 28.79. And the euro continues to push even higher here. Look at this. Dollar index still push a little bit lower here. We still think that eventually we're going to get right here to 94.09. We're not that far away from it. So where do we find our resistance? After a pretty good pullback, and we're coming here to try and make a move. At least they're trying to set up a little bit of a mini double bottom here, but I think the door's still open. If this dollar unravels further, there's a move down here, this 28.79 to 38%. Man, look at that. Look at this euro. It just made another run up in here. Right there. Still pushing up here. And let's go on and boy, that dollar's getting whacked pretty good here. Let's go on and move right now into the dollar Swissy. And this is starting to go on and unwind a bit here. Also with the dollar weakness that we've seen coming into support here for the dollar Swissy. Would come in right there, 96, we'll call it right there, 96.23. Let's just call it 96.22 for today's support. I just want. And someone just mentioned something in the chat room about the dollar index coming into support. And this is the same area I've got right here, this 94.09 that we talked about. And I would expect some pullback from that area here. Moving on back to the dollar Swissy on the upside, resistance will come in right there, 96.76. But obviously, we're going to be doing some work. And let's take a look on a fib where we stand here. Coming in right into the 61%, with just a shade from there. But we'll give it all the way. Actually, we'll just move this up just a hair bit higher. Right here, 96.26. Let's call it 96.27 for the support here for the dollar Swiss. And for resistance, we'll go with the 96.76 there. Dollar really taking a pretty good beating right now. Even the cable here, look at this. Up, up, and away. And even that's even with rates being down here. I mean, well, the futures price is right here. And let's go on and move in now to the dollar yen. This continues to stay right here and hang up in here. And we talked about this. I really don't, you know, here with the dollar yen, we had 1253. And I don't see anything changing from here at this 1253. That would be resistance right there. And even with higher U.S. rates, we're still not able to do anything with that, with higher U.S. rates. Now, as far as support, I think that the market is susceptible. So I'm going to go with the support all the way down here at 1166. Look, we're still bullish. We're above this bias pivot, but this dollar is starting to really give way. And if that does take place and the dollar yen pulls back, we could really hit some stops. I think you have to be very careful here. So we're going to go with 1166 here for the dollar yen. And let's go moving now to the cash dollar index. Well, we talked about this 94.09, and this is where they find the support here. You can see that. They actually overshot it down. I think they got to 94.05 and 94.04. This is our support here from yesterday going into today, 94.09. So we've made it here. I think we can still, you know, our target that we had in place, which was, you see right here, the break of this line right there to down here would take us there. And that's where it came up with this 92.80-ish right there. Actually, that's from the break from, messed it up. From like here where it would break. And then now if you pull that back, that would give us like around this 80-ish area here. And so I was looking for a intermediate target of 93.72. So we're going to use that as our support for today. 94.09 did work. It's worked. We may see a bounce from here, this area here, a little bit of a bounce, but the 93.72 we're going to give as our support for today, 93.72. As far as resistance now, that would be resistance right there. And that may even be a bit of a stretch. That's where resistance is going to be, 94.50, 56. 94.56 would be resistance. And really, if you're day trading it, your resistance would come in at 94.38. That's if the news came in. Matter of fact, we'll just split the difference right here, right there. 94.44 is resistance for today. 94.44. Looking out. I don't know, we got this. That was crazy. I don't know why that came up. That wasn't correct. There it is. And it's just about to turn bearish now. And let's go move into the gold market. The gold market has been relatively quiet. If you look here, relatively quiet, but it has held. This is that same area we've been talking about, needed to hold. When we came in on Monday, remember, we said we're at the precipice of support. I mean, it was right here. We had horizontal support at 97, trend line support at 97, and this market could have been into some kind of a hurt here. But if you think about where the dollar's fallen, look, we're even pushing beyond here. I like that 93.72 for our support. I'm surprised that gold hasn't moved a lot higher. That's just saying. Somewhat surprised. So with the gold, I think we're going to go and keep that the same. It's going to be 12.15 for resistance, because certainly the dollar is opening itself up to move higher. The only thing I think that's keeping gold from rallying right now is rates, because although this has not helped the dollar, I think it does have gold worried here. And we do have the Fed coming up, but I mean, with rates have really taken off, and that's going to work as a negative towards gold. Watch out for this dollar index. We're going to get to that, but I think we might be able to scoot down to our support here, 93.72. I mean, our support from yesterday into today was 94.09. We've made it here, but I think this is where you'd find some buying in here. So same thing here on the support. We're actually going to move it up a little bit higher here for we'll keep it here. One thing, like I said, with the gold, we're going to keep everything, and that would come in coincide right here with the trend line. So we'll stay with this 1202. So no changes here in gold. Now let's go and move into the cash dollar index, which we just did. Looking here, this thing is really under some kind of pressure. Keep an eye on this 93.72. I think that's where they want to go to. This was a good area here. So that's what I'm saying. If we make this shot down 93.72, you may see a little bit of a bounce back from that point. And let's go into the bonds. Man, these bonds are something else. And it has not provided any support for the dollar. None whatsoever. That would be support right there, 39.30. We're not that far away. That'd be support, 39.30. We get below that at 30-minute close, they're going to try and push even lower. But boy, these bonds, they're in this key support overall. With resistance right there, 40.16. For right now, 40.16. Not that far away either. But that would probably be able to allow it to trigger for a move higher. So we're going to go 40.16. Obviously, still bearish. And let's go move into the bunds. Bunds holding near these lows. These bunds don't look too great. I mean, they just look like they're just a couple of stops away from either blasting higher, blasting lower. I mean, it just doesn't, but we'll go right here, right there, 58.54, which isn't that far away. Same support, 58.54. On the upside, that will be, I think that was the same resistance here. We're going to keep, well, at 58, now we're going to move this down to 58.84. And moving into the DAX, well, just going with the levels. 12,280. Nice recovery here in the DAX. And support. Going to be right there. 12,158. 12,158 for support for the DAX. And there's a bias chart for today. This dollar index, like I said, it made it to our 94.09, which is support from yesterday into today. And this is our intermediate level that we're potentially in for, this 93.72. And this dollar index is taking one heck of a beating right now. Euro's still hanging right near its highs. There's our resistance we're looking at today. Although I think this is originally was our target from about a week and a half ago, which was the 1783. I thought we might be able to make that move up there. We pulled back, but initially, before you see a reactionary point, I think it's the 1767. Cable very, very close to our overall target, which is 33.17, the 38%. But we have a resistance. I think we put that right there at 32.97. For the cable, 32.97, and the Aussie doing very, very well here. $73.20. So if we see this dollar on one further, this is where potentially we can push up. The Aussie pretty much ignoring all this trade news stuff anymore. Not interested in it. And we have just a few moments before Blake comes, or either Dale comes on, one of the two. Hang on, I'm trying to get my, so I'll be able to hear the audio when they come on. So just give me a second here, and we're doing real well ahead of time. Look at it, we're still pushing higher here. And just want to be ready for when the I don't know if it's going to be Blake or Dale that's going to go on and be joining us here at the top of the hour. There we go.
Hey, Paulie, can you hear me?
And look, gold's starting to rebound a little bit up in here with the gold market. It's been a little bit, I guess, with the dollar further unwinding, we're finally starting to see a little bit more response here in the gold market. But I think what's holding the gold market right down is right now where rates are at. And certainly the rates have not helped the dollar in any way whatsoever. And certainly we're seeing this come to fruition here with the dollar index really pressing these lows. I don't know if we get one more downside spike into this 93.72 possibly, which is going to be our daily support level. But we've done very well as far as time-wise goes. I would say that if you're long the euro or the cable, just you may see a little bit of a pause coming up. Actually, even came just past our support here at that 94.9 I mentioned, but today's support comes in at 93.72. So if we get this dollar to dip down here, I'd definitely be lightening up some positions on a short-term basis right here. And actually, I don't hear Stelios says, can I hear him? I don't hear Stelios.
Hey, Paulie, can you hear me now?
Okay, I can hear you now.
Hey, how you doing?
Hey, I'm doing good. How you doing?
Great. Can you have a look at the bias chart on the DAX? Looks like the support and resistance are very close. Is there a typo somewhere? I actually missed the first little part of the webinar, so I didn't hear you go through it.
Okay, the DAX 12,280 right there. I just went straight up with the technicals.
Yes.
And the bias chart support, we're keeping it pretty tight right there. 12,158. So it should be 12,280. So I apologize. Yeah, you're right here. 12. Oh, I got them inverted. So hang on. This is and 12,280.
Okay, great. Thank you.
And we'll just revisit that quickly. So here we are at the DAX. We're just going straight up here with the technical level coming across. And we're actually on the 2-hour chart on the DAX. You can see here a good level of volume coming in right here. That's where they're running out of gas. And really things have, the DAX has been under trouble or in trouble for some time. You can see, even though obviously with the S&Ps we're moving hard, NASDAQ, the DAX just kept going lower and lower. Things are starting to turn around here. So I think that any dips will be bought, and the dips would come in right around here. You see here, 12,150, 56, right there. So any pullbacks, that would be your initial. Doesn't mean that if the market didn't pull back, you can't find the good support coming in at 12,102. But I think this is your first area of buying. If anyone was short or anyone was trying to buy this on a very short-term basis, they'd be coming in right here at 12,156. Or actually, we've got it marked as 12,158. We'll move it just 2 ticks lower if it's going to make a big difference. But I'm glad that Stelios came in to go on and advise me of that. Well, look at the euro, still staying firm, but look at this cash dollar index. We're just below our support. Our support for yesterday coming into today, as I mentioned before, was 94.09. So we did come to 94.09. Here's our intermediate target, which is 93.72. And that's also going to be today's support going into tomorrow. So 93.72 on the cash dollar index. We're still about 2 minutes away from either Blake or Dale coming in. As I mentioned before, I'm looking for a move, an eventual move, correction down here to around 92.80-ish. We may overshoot that. And that's just taking this bar and just moving it here, measuring it down. It comes around 92.80, might be 75, but we're looking for an intermediate pause at 93.72. It's the same thing we saw here with the cable when we're looking for 133 and we had an intermediate pause of 31.70. Then you saw the market, pull back. It eased back. I think it took it out by half a pip and then eased back, not a whole lot, but it did go in and pull back a couple of times. I think at one point pulled like 50 pips or more than that and then vacillated back and forth until we were able to go and eventually break that. Looks like the euro just took a quick pop. I just noticed that. We just got there, 71.67. That's today's, take a look here. That's our bias chart resistance. So we just hit, looks like we just hit it. I'm looking at it on a 30-minute. $64.5. So I had it marked to 67. So watch that. This is right here. I think we've already had a pretty good little stretch. So we may see the market kind of pare back a little bit. And we just got the cash dollar index to take out 93. Look, we've already had so that jumped the euro up to, was it 64.5? I had that level marked as 1767. There we are. We're right there at resistance. And that's kind of coinciding. We're not too much further here. You see here, 94, 93, 93, 94, and we're looking for right here, 93.72. So actually this euro might even get further impacted because the cash dollar looks like it could go a little bit lower. But we have hit our resistance here in the euro. But like I said, this thing can still move higher with all this dollar unwinding.
Hey, Paul.
Hey, Blake, how you doing?
Good morning. Hey, I just want to say great call the last couple of days. You've been pretty unwavering as far as looking for dollar weakness. You watch bonds right now. Bonds are screaming lower. Yields are flying.